afternoon and welcome everyone to our afternoon session of our mini conference talking about long-term financial planning. We've got a fair bit happening in the local government space with the introduction of the new Local Government Act and new requirements around long-term planning and integrated planning. So we thought we'd bring some of the people that are out there, some of the companies that are out there with their products that can help us make it easier. So our first session today is with MAGIQ software, and I'll introduce Julian Smith from MAGIQ.
Thanks very much, John. I'm just going to bring up my presentation. Just nod at me, John, if you can see this. Terrific. Well, good afternoon, everyone. And on behalf of MAGIQ Software, I'd like to thank FinPro for inviting us to today's session. We're grateful to be able to share some information about how MAGIQ has a solution for long-term financial planning with our planning software. As you heard, I'm Julian Smith and I head up MAGIQ's customer and partnerships team. I'm based in Melbourne, and also presenting today is Rhys Jones, a financial consultant with MAGIQ, who has deep technical knowledge and experience with our long-term planning financial solutions. So we're grateful to be with you today. I'd like to start with a customer logo sheet highlighting some of our customers around Australia. MAGIQ has over 355 customers nationwide, and in Victoria, we have 169 clients using our budgeting and reporting solutions. And on the call today, I know we have current MAGIQ users amongst this FinPro group and possibly previous users of MAGIQ over the course of your careers in local government. So it's good to be with you today. To understand MAGIQ's long-term financial planning solution, a couple of things to set the stage for this presentation. We call our long-term planning product financial planning, and it fits as a licensed module that sits alongside the standard budgeting and reporting functionality of our MAGIQ Performance product. Before we dive into the product itself, I'd like to call out some of the key benefits of this solution. First is MAGIQ Financial Planning has been a solution delivered to our customers over a significant period of time. It was first released 7 years ago in our New Zealand market as a response to the legislative requirements there that called for 30 years of financial budgeting and planning. So MAGIQ has good depth on this functionality, and we have current customers you can talk to about their experience. As a module within the overall MAGIQ Performance solution, the customers we have in Victoria who currently use our product are able to add it to their existing MAGIQ installation without having to implement a completely new system or to learn new software. To advance from a current financial year budgeting solution to a 10-year planning solution is, in essence, incremental licensing and setup. MAGIQ connects to your underlying ERP finance system and facilitates synchronized data transfer between the two. There are very few ERPs in local government that we haven't connected to in the past, and as you can see on screen, our library of connectors are already written and in place across our customer base. Our approach to implementation is called data first and means, in a nutshell, that from as early as possible in the rollout project, we get you working with your data you inherently know and understand. This can mean a much shorter learning window by getting you working in the system with transaction data, accounts, structures that you are familiar with right from the start. MAGIQ Planning is cloud ready and cloud delivered today. Our cloud delivery partner is Amazon Web Services, and MAGIQ has spent significant time and resources in getting this right and robust. The last 12 months, and especially with remote working now being a necessity, we've seen the demand and uptake of our cloud delivery take off in our customer base, both in migrations to cloud and in new customer implementations. If you're not cloud ready yet in your organization, our on-premise versions are also available. With FinPro as a Victorian body, I think there is something to be said about MAGIQ Australia being based out of Melbourne in Box Hill. Remote implementations under COVID-19 have become the norm for us of late, but it's good to know we are nearby and in Victoria. Advancing to long-term financial planning as an existing MAGIQ customer may be one of the best value ways of meeting your legislative requirements under the new Act rules. The module is an additional annual license fee plus consulting services that we provide expert scoping on to get you where you need to be. If you haven't used MAGIQ before, utilizing the whole performance platform is something we'd love to talk to you about. One of the big problems MAGIQ planning solves is getting this year's budget, next year's budget, and the next 10 years budget planning into one place that is secure and can be trusted data. No more thinking about which version I just got back in my inbox to enter into a global Excel worksheet. No more worrying if my stakeholders use the right assumptions about inflation or interest rates or revaluations or growth rates or other variables. Instead of having data in various places around the organization, it's a single source of truth where users come into the system to enter their data and numbers in a controlled environment with your organization's security and access authorities intact. And if you keep data secure, you reduce risk. Risk of incorrect and old version spreadsheets, manual and incorrect work, having to check assumptions over and over each time you cycle through a new plan or model. These all add to your risk load, and when dealing with not just 1 year's data, but 10 years, the risks magnify themselves unless you can have confidence in the parameters staying solid. Which means now with a robust planning tool, all that time creating, updating, fixing, checking, and distribution disappears, and you get to focus on the reason you started down this track in the first place, looking at the future state, easily generating what-if scenarios of your financial positions, being able to make adjustments easily, change assumptions easily, the calculate and return results in real time that provide all the outputs that you want. We absolutely meet the 10-year requirement of the new Local Government Act. And if you want to look out even further, as I mentioned, we've been helping our New Zealand customers get to 30-year plans for some time now. Refreshing data is real time and across all data, from the transaction levels all the way up to your plans and forward-looking financial statements. And getting your existing data in from your current financial system and from multi-spreadsheet sources that you may have and keeping assumptions consistent is part of our service to you. Want to create a new plan from an old one? That's doable too, with MAGIQ's import, copy, and functionality. So that's enough from me, but let's get in a little deeper with Reese, who will get us inside the MAGIQ financial module for the balance of our time today. Over to you, Reese.
Thanks, Julian. So thank you all for coming to this. Firstly, I just wanted to talk about the common processes that we've come across with our councils. They're very much Excel based and with what we would describe as multiple ecosystems. So what you've initially got in the stage when you're creating your base budget, we have them outputting to Excel from an ERP platform and then creating their budget sheets. Now those are obviously for each of the different cost centers or divisional areas. So there's quite a few of those. So it's creating those budget sheets, distributing them out to the budget managers, generally via email, receiving them back and collating them, recognizing, and I'm sure you're all aware of this, they tend to add rows and they tend to add columns and they tend to overwrite formulas. So that process of collating that information back into a solid single base budget spreadsheet is not a small job in itself. The next stage is then finalizing that base budget and creating reporting so that you can then distribute it around. Once again, that's done via email and hard copy. So it's a very manual process. There's a lot of reconciliations. And it's just a tough process. A couple of our clients sort of said to us when they replaced this process with MAGIQ Performance, they felt that it was still a big job. They said that they weren't having to work their weekends and they weren't having to work late at night because, for example, setting up those budget sheets meant they do it in one hit in MAGIQ, and then they could roll it out to everybody. But I'll go more into that when we talk about the MAGIQ processes that we have. Next, we come to the long-term planning process. And as Julian rightly pointed out, it's a mandated legislated process in New Zealand. It's a big deal. It's 30 years. The audit fee for a long-term plan is the same, if not more, than a normal audit fee. So it's a big deal. And so what our clients are and were using was these massive Excel workbooks. They were full of macros. They were sitting on someone's hard drive. They'd been inherited from someone that had either been with the bank, been with the council a few years ago or a long time ago. So there was no one really there with the knowledge to maintain it. So generally what people would do as they came into the role is they'd build another one. So it wasn't very efficient. And, there was just a lot of time spent on sense checking and reconciliation because there was never that much confidence around the process. And then going forward into the reporting They'd be reporting the output from the LTP model would be going back into Excel spreadsheets. They would be getting that then presented to council. Council would make their recommendations and changes. It would come back to the finance team. They would have to do a lot of reworking. And then once again, from the next process on, when it goes out for public submission, comes back again, they've then got that whole process of rework. Very manual, very time consuming, very stressful, because generally it's under a lot of pressure. So we recognised that was something that we needed to help our clients with. So the next step we're going to go to is the next slide, Julian, which is the MAGIQ process. So the MAGIQ process is slightly different, and I'm using this term ecosystems. There's two key ecosystems instead of multiple. The first ecosystem is obviously your baseline ERP platform, and then there's MAGIQ or MAGIQ Performance. And just on that, the MAGIQ Performance data that comes out of the ERP system is either refreshed on demand or overnight as part of an automated process. So we have the base budget process, which what happens is you create your budget sheets and you can pre-populate them so that the budget managers, when they see the budget sheets, they know what the starting point is. You can create conditional formatting around variances. You can ask them to enter comments against anything they want to change, etc., etc. So you've got all that workflow process that's tried and true within the MAGIQ budgeting process and very successful for us. Another key point is probably the one where we say that the data is immediately available. So soon as someone enters data into MAGIQ and saves it, it's then reportable. So you have a very clear picture of where things are at. And once again, with those workflow processes that we've got in place, you and the finance team can see who's done it and who hasn't, so you can follow those up. You can create a suite of reports that are driven off this base budget. And then as the base budget changes, then so do the reports. You don't need to go and copy and paste and move things around. Going from there into the long-term planning module. So the planning module itself sits within the MAGIQ ecosystem, so it's fully integrated. The data is stored, the data and the logic are stored and backed up on council servers, so everything's within one place. The planning process, as I'm about to show you shortly, is visible and replicable, so you can roll forward. And what our clients in New Zealand do, because they have to do a 30-year plan, they just roll forward a year every year. You've got this backup of MAGIQ consultants. So if someone does leave or someone gets sick, you've got that backup support. So we can step in and we can help you, or we can train your new staff member how to do this planning process. And we would also help you in terms of setting up screens and etc., so that you can do your data validation and reconciliation processes. And then from a reporting side, as I said before, the output from the LTP model is immediately available in MAGIQ upon publish. You have these pre-configured reports which can be distributed electronically immediately. It just completely takes the stress out of the rework. So on the next slide, Julian, we're just going to go to the demonstration. So I'm going to show you the software. So we'll just have a slick transition here. So if you could just confirm, Julian, that you can see the screen, that would be great.
Yep, that's up, Reece.
Perfect. All right. So what we can see here is the MAGIQ financial planning module sitting within the ecosystem, which is MAGIQ Performance. So we've got our general ledger reporting data set here, and over to the right, we've got the My Financials tab. So you can have, as was pointed out previously, you can have multiple versions of a plan. You can have a plan for 10 years. You can have a plan for 30 years. You could have a plan for 100 years. I know in New Zealand, there is some talk of going out to 100 years for your infrastructure assets. Interesting. So we look at our plan layers. So the idea is that this is a planning tool as opposed to a reporting tool. So we keep it very shallow. We only have two sort of key grouping layers. The first one being the major groupings, being OPEX, fixed assets, CAPEX, depreciation, loans, reserves, interest, transfers, balance sheet funding, and non-funded. The secondary layer is where we have, and I'll just click on another one down. So we have the three layers. So we have the layer one, the layer two, which is the calculation layer. So for example, it might be, in this case, you've got different inflation rates, whether it's 1, 2, 3, 4, or 5, or state or federal, or it might be that it's based on a growth rate, or it might be for a set of assets that are revalued versus a set of assets that aren't revalued. There's all sorts of different ways that this can be done. In New Zealand, just for your information, with this new legislation coming out here, over in New Zealand, they have a body that provides the growth rates for each of the different industries like roading, water, assets, etc. And the councils are all mandated to use those rates in their LTP modules. So we've got the first layer, we've got the second layer, and then the third layer is all your accounts. And we always recommend that you map through all of your accounts into this so that you've got a complete and accurate model. Obviously, you can have the ones that are obsolete or not used, you can have them mapped to an obsolete area, but it just means that you've got everything mapped into the model. Now, just on that, this hierarchy can be maintained within MAGIQ trees, which is our inbuilt MAGIQ hierarchy tool, and brought through into here very easily. And you'll notice that we've got different colored folders. Those folders reflect the status and the workflow that these guys are at. So we've got here, red hasn't started yet, yellow is underway, green is completed. When it's green, it's locked down, so no one can edit any of the business rules. Another thing around the workflow and checks and balances is you can only have one person in at a time with read-write access. If someone else tries to go in, it will tell them that it's read-only access. So that's the structure. And you'll notice, once again, I'll just reinforce, this is purely a calculation tool. The reporting side of things is done with the output when it's fed back into the general ledger dataset. So the next thing I want to talk about is the plan inputs. So we have the base budget that we spoke about, which is basically the budget that you've asked your budget managers to input for 12 months, for example. We're just working on a 1 year, but we do have other sites that would do it for, say, 10 years or even longer. So you've got your base budget. The next part of it is the assumption. So I'll just click on that. So the assumption sheet is pretty self-explanatory. You call them global drivers or assumptions or whatever, but you've got here, you've got your inflation. So you've got all your inflation types here that we've utilized in our model. And what you see here in this assumption ID, that is what comes through in the business rule, which I'll show you shortly. And then we've just got all the compounded rates to the right. We also have interest. So you can have interest feeding into this, and you could have internal and external interest. We can also take account for revaluations of assets. So we can have that coming through. Say in this case, we've got it's a 4% growth every 3 years. So we can have that too. Other examples could be you could have growth. So you might have some growth factors. You might have some things that are driven off population growth. There's all sorts of different ways that you can do that. So that's the assumption. So we use those. We also have the variables. Now the variables are bits of SQL that go and do the more complex things. We help you build those at the start, and we teach you how to maintain them and roll them forward. An example would be the base budget, where we're going to grab the base budget or input budget from another table and bring it through into this module. We have a couple of very basic variables here. One is what we call the inflation switch, which we build into our calculations such that if you want to turn inflation on or off, you just go and change that from 0 to 1 and it will turn it off and on. We also have a revaluation switch, which is a similar thing. So you can turn that off and on. We just try to create flexibility within the model. We also have what we call global worksheets. Now this is where we introduce other things which are not part of that base budget. An example would be an opening trial balance. So we want to bring through an opening balance sheet. We recognize that you might be starting your budgeting process from July next year, for example. So what you might have is, this is my audited balance as at 1st of July this year. And this is what I think it's going to move by to sort of calculate what you think your opening balance is going to be for next year. We have opening fixed assets, which is really what we care about with that is of my existing asset pool, what is going to be my schedule of depreciation over the next 10 years. Now you can have that at a summary level, or you can have that at a very detailed level. It's up to you as an organization. Opening loans, what we care about in there is the loan repayments and the loan interest commitments that we've got going forward. Once again, some of our clients do it at a very detailed level, and they'll represent all loans on a line-by-line basis. Others just do it on a very summarized level, remembering that the model does lookups. So the whole thing around this is it will go and look up this table based on, for example, the account code. So as long as you've got all the summary balances for each of the account codes, you're all good. we have what we call reserve funding and funding mapping. So these are mapping tables. So what examples where we use that is what we want to say, for example, is, okay, which accounts are paid for by this particular rates account. You can get that representation in this model. Similarly with reserves, it could be, I want to see the reserve balance, the reserve transfer in, and the reserve transfer out codes. I want them all to be matched together as well. And if you had interest around that, you might have your interest expense or interest income accounts also represented in that mapping table. We have transfers, which is where you might have an overhead cost center that you want to allocate the costs out to the activity cost center. So you can do that through here as well. Journals, I'll just click on that one. And this is purely where you can do one-off adjustments. You can do matched adjustments where you have an account code, a description, a comment, and then you can adjust year by year, plus $1 million, minus $1 million. And that's for those one-offs that our finance teams really love to do. And it's all sitting within here, so it's all visible. It's very easy to look at. And you'll notice that on all the global worksheets, I always have the last updated, so you can see when this input was last updated. And finally, I have the capital works, which is the big one. So what you do is you list out all your capital works, and then you say how much you're going to spend year by year. You inflate them, and then all of the flows relating to the funding of those flows. So all of that information is fed into here and comes through into what we call the capital works. So as you can see, there's a lot of inputs. How do we bring them into the model? Well, this is where we have the business rules. So we have the business rules window here. You can see that we've got the opening balance area, we've got the period movement area, and over to the right, we've got the closing balance area. And what gets written back, because the output of this is a trial balance year by year for, in this case, 10 years. The output is what is written back from, is written back from here. Sorry, that's bad English. So let's have a look at a particular account. So we're going to look at reticulation maintenance. And what you can see is I've pre-populated some business rules here. Once again, we would help you build those in the first instance, and we would train you how to maintain them. So I'm going to do a calculate to just show you how it looks. So we do a calculate there. I just went right click, calculate. And so what I've got here is I've got the, in this case for the period movement, I've got the formula, I've got the formula in numbers, and I've got the result. So once again, we are trying to make this as simple as possible. This is not a black box, it's not macros, everything is there for you to see. So that's really what we wanted to show you, how that would work for the business rules. The next stage is when we do a publish, and I want to show you how we do a publish next. So once you've finished your plan, or you finished a part of your plan and you want to have a look at it, you would run a publish. And just before I open that screen up, just to let you know that the ordering here is important because the model just goes down. It's not, there's no circulars, it just runs all the way down. So all the logic is, we call it a fountain, not a Ferris wheel. So it always just rolls down. So when you see the publish screen, you'll see what I mean. Takes a little while to just connect, which is what it's doing now. But what you'll see here is you've got optionality. So one of the other criticisms of workbooks, etc., was people were saying it takes forever to run. Well, what we've set up within this is that you can select either to run the whole plan, and it will just run all the way through. As you can see, this structure here reflects what we've got in our tree to the left. But if we said that we only wanted to run one part of it, then, for example, we would click on that, and that would run that for us. And that would do that publish. And when I say publish, it writes it back to that output budget that we've got set up that is viewable within the general ledger. So as soon as you run this publish, that data is immediately available and reportable. Which brings me to the next part, which is the reporting. So you've done your plan, you've done your publish, you go into your general ledger reporting data set, and what we've created is a set of fields. So we've got 10 fields here, being the long-term plan budget, year 1 through to 10. And then we've got our budget, our base budget field here. So this is what we call a save screen. So this is sitting within the general ledger data set. It's got the structure that we've got for our everyday operations, but the content of what we've got here is the output from the plan. So this is immediately available. You also notice down in the bottom left in the filter areas, we've got filters that we can use for different things like around the LTP areas and things. So we've got all that filter information available. So when we're doing our checks and balances of the output from the plan, we can check very easily within the screen. A good example of that is where you were doing transfers, where you were saying that you're recovering costs out of an overhead cost center and you were going to transfer them to an activity cost center. You could do a filter on transfers or overheads to ensure that they added to zero and that you weren't creating any income or expenditure for the council as a whole. The next part I want to show you is is what we call a dashboard. So I'm just going to click on this dashboard here. I've called it My Financials. It replicates that screen that you saw in the previous data browser. And what I would suggest, and what we usually suggest, is that this is the landing page for the majority of users or data consumers. And so they will look at this and they would be able to get a really good idea of what the status is. Now on this, any information that you see through here, through MAGIQ, is information that's compiled on the basis of the user access. So if they haven't got access to a particular area, they won't see it. So they will only see their parts of the business, if you like. So you can create a suite of reports, fire them out to everybody in the organization, and each person will see the information based on their user access. Now we've got some links to the right here. We've got the ability to click through and amend the base budget. And we could be suggesting to our budget managers that that's the way that they access the base budget, going, as a starting point. We've got reporting. Now we've got some reporting here. And what I just wanted to represent is that you could have multiple reports based on the multiple versions of the plan that you've got running. We've got council reporting. These ones are what we call MAGIQ Excel reports. They're print quality. I'm going to click on one now and let it load up. Because what I want to show you is this report, the reason it takes time to load is because it's rendering for the user access that I have, and it's rendering for the latest data that's available as a result of the publish that I've done in the long-term planning model. So it's live and it's available and it's focused and it's filtered for me. So I just let it run, and I just want to show you this one. Just while we're waiting for that to run up, there's a couple of other things here. We've got all our financials. We've got all our financials driven within here. Oh, here we go. It's showing it now. So you've got this. You can bring this up on a screen in a council building in a training session, or a workshop, or this could be something that you're using to distribute out in other ways. Just about to finish. Just the last bit there. So yes, you can have your financials running off this as well, and you can have all your audit work papers. So if you're going to be audited, you can have all these work papers ready and available. We have had this model audited in New Zealand because it's been through a couple of long-term planning models sessions, and it has had very good reviews and had good mentions and management letters and things. So it is tried and true. So yeah, just getting back to that, you can have all your audit work papers and your audit financials set up and ready to run out of here as well. So Julian, that's enough from me. I'll send it back to you to finish off, and then we'll have any questions if there's any. Thank you.
Can you just stop sharing for me, please, Reece? And back in. And there we are. So thank you very much for your time today. I know we're running right down to the wire. I just wanted to put this splash screen up saying if you want a more detailed and deeper dive into the product, please contact MAGIQ at the email and numbers below. You can also visit our website at magicsoftware.com, and we will be providing details shortly of another webinar event to spend more time on this solution. Half an hour is really not going to get us too far, and we'll get that invite circulated through FinPro appropriately. Once again, thank you very much, and goodbye for now, unless there's a minute worth of questions. Thank you.
Thank you, Julian, and thank you, Reece. I think Reece did all the heavy lifting there. So if anyone's got questions, send them through on the chat panel. We've got one. If we already have MAGIQ Performance, how is MAGIQ LTFP integrated into our existing MAGIQ Performance?
Yeah, go ahead.
I'll answer that. So it's an additional module that we get up and running, and basically we have what's called the input budget, which is in this case the base budget. And what it does is it brings that in, bring all the other inputs together, and then we write it back to your output budget. So that output budget will either be sitting within your current financials or general ledger reporting data set, or you might choose to have a separate one with a separate structure over it. So it just all sits within the same area.
Okay, more questions? Can the MAGIQ solution accommodate scenario modelling?
When you say scenario modelling, you can either have multiple versions of your plan inputs, or you can have multiple versions of the plan. So the answer is yes.
Okay. Next question. Do you have any training program for non-customer individuals? Maybe non-financial people?
Generally, a non-financial person wouldn't tackle this, but we could help them. I mean, generally, what we're trying to do is create as much of a templated solution as possible, and we're working behind the scenes to do that more and more.
Okay, and is the LTFP integrated with other modules in MAGIQ, such as financial reporting?
Yes.
Yep. Okay, I think that's it for all our questions. So I'd like to thank Julian and Reece for coming along today. For MAGIQ software, the recording will be made available for our members, and also PDFs I think we've got, and contact details. So thank you very much to MAGIQ. Thank you.
Thank you very much.
Thank you, guys.
Okay. Our next provider is from LG Solutions, and it is Manuel. And I'll give it to you. Take it away.
Okay, thank you. So I believe everyone can see my screen now.
Yep.
Yeah, beautiful. Okay, so well, thanks very much for giving us the opportunity to present today. A quick half an hour. Just a brief overview for the ones that actually don't know LG Solutions and our LTFP history. Our LTFP, Long-Term Financial Plan, was released back in 2010 in starting New South Wales, and we are now up to version 12. So it's basically the 12th year now in existence. We have more than 100 councils now using our long-term financial plan across Australia, and there are specific state versions out there, i.e. To comply obviously with different reporting legislations, income statement, balance sheet, different formats, KPIs and so on. So we obviously have New South Wales, Victoria, South Australia, Queensland, and WA, Western Australia. Version 12 will now also see the release of our cloud-based LTFP, starting with New South Wales early 2021 and Victoria planned mid-21. So what we're looking at today, functionality-wise, in our long-term financial plan is Excel-based. All those features will then obviously also be available in the cloud. Okay, so our long-term financial plan is customized, bespoke. It's actually using council's own chart, general ledger structure, COA account structure and reporting structure, but also asset classes and any specific reserves that have been set up. Some of that data is required, like our ledger data or budget accounts, and then a mapping component that it's used to actually then map the council's individual chart of accounts and ledger data to the long-term financial plan, similar to year-end mapping, etc. And then any additional data, if desired, within the long-term financial plan that aren't necessarily needed to produce the primary financial statements, obviously, and that is organizational structures up to 6 different levels, functional structures also up to 6 different levels, and account structures currently up to 4 different components, which usually caters for all different type of finance systems out there. The implementation initially is all done via separate data collection files, which obviously makes it all very structured process and also quite easy. And then ultimately the LTFP will come ready to go, incorporating council's current year budget and all the specific setup. Primary statements, they're all in statutory format. That is obviously the income statement, balance sheet, cash flow statement, equity statement, and the statement of capital works. Each of those ones includes 1 year, the last year's actuals, which actually are coming from council's audited financial statements. We have the current year budget and the 10-year forecast. Okay. We have several drivers in there to build up the future year forecast. That is obviously using as a base the current year budget, i.e. 2021, and then forecasting. One of the drivers is what we call global percentage. That is attached to a long-term financial plan global item. So here we can just see a little sample, and ultimately it will then attach, councils can attach or enter different indexations to any of those items, and ultimately every ledger account or budget account is attached to one of those items, and consequently then indexed using at a high level the respective indexation factor. Down to all those drivers obviously are then available or repeated over the 10 years in each year. So we'd say here a sample in addition to, or the global percentage, obviously in a view where we can really start drilling down into individual ledger accounts and their balances. We can see the global indexation and the result, or the dollar change of the result of the indexation itself. That obviously will flow through from the overall matrix. That can also be turned on and off for a specific ledger account. So council can decide, like here, whilst all the other materials and services will be indexed using the global indexation 2%, we can also then go decide that that one ledger account or a group of ledger accounts, we don't want that to be indexed using the global indexation. Then we can use specific individual drivers, which is a individual percentage entered here. Obviously, we can have a dollar amount as a driver, either recurrent, which obviously means that will also be pushed into the future and is subject to indexation, and one-off dollars, which only impacts really that 1 year, but won't be pushed into the future and is not becoming subject to indexation in future years. And so here all the different ones, and ultimately the sum of all those individual drivers will make up then the revised budget or the forecast in that particular year. Usually councils use the LTFP to build up the future year forecast. However, if a council already has based in their enterprise system or budgeting enterprise system more than only the current year budget, maybe 2, 3, 4, 5 years of forecast, that can also be imported into the LTFP, and council can then only start, if they want to, forecasting from year 5 or 6 onwards using all the different drivers. We've got scenario analysis. Like a before and after scenario names to obviously clearly identify that. It shows you the impact of any of those changes on the headline figures, but also then charts that are included before scenario, just one bar, one line. If we enabled scenario, then we'll see 2 bars, 2 lines, but also obviously then different coloring, which color is obviously the before scenario and which one is the after scenario. There is the clear transparency. So the income statement is not just one little box. So any balance in the income statement, that's the same balance sheet, cash flow statement, equity statement. There's all a detailed calculation behind that obviously shows as per the budget coming from the individual accounts, but also then any other high-level LTFP adjustments. Okay, so we've got the detailed calculation, the overall balance of that income statement line item as an example here, which then flows through to the income statement itself. But that can also be used and in other places to actually then forecast a balance sheet account. In our case, the individual rate status, which then also has the individual calculation, and different subcategories of debtors obviously then would form the overall balance in the balance sheet for trade receivables. Okay, the the balance sheet, accounts where councils are usually budgeting for movements like infrastructure, plant and equipment. It's using budgeted movements, depreciation, disposals, additions, revaluation changes, etc. On balance sheet items where councils traditionally don't budget for the movement or items like receivables, payables, that will be actually calculated using historical ratios. So we actually bring in the four years past historical data, council's financial statements, that calculates certain ratios on a whole range of different balance sheet subcategories, etc. So like trade and receivables, other receivables, we've got, rate status, there is a historical calculated ratio that will be applied by default to each year. Obviously, the basis for that ratio will change, but the ratio itself will stay the same. And that can be also then targeted via a percentage, which then obviously will change the underlying assumption of the balance sheet calculation. But we can also actually target the balance directly via an amount. Okay. CapEx can be aligned with any asset management plan. It summarizes initially all the ledger data. If council does not want to actually do that, there's no need to actually do anything in here. The balance sheet is still produced because there's only one line item. It doesn't actually look at the section between the different type of construction, whether it's new, renewal, expansion, upgrade. But if we want to produce the statement of capital works, we obviously need a little bit more information. So we can use one of those sheets to break down or reallocate our overall annual capital works program down to allocate that to asset classes. Those asset classes are obviously customized for each individual council based on their last financial statements. We have, whether it's renewal, new, upgrade, expansion, etc. You propose the budget, and all that information then ultimately will populate the capital works program, which is obviously a statutory requirement under the new regulation, and just the different asset classes across the years, but also then down the bottom below the breakup total between obviously renewal, new, etc. Okay, if nothing has been allocated here, it all goes only to a reconciling item, assets not allocated. So the overall balance will still flow through, but the detailed breakup per asset class, etc., that needs to be obviously then done. We have another tab that actually looks at an easily view of the impact of major projects on the LTFP, and there are projects that are currently not included in council's ordinary budget. So that could be, for instance, what I have listed here as an example, a new aquatic center. So currently our LTFP is all business as usual, what currently has been done, forecasted for the next 10 years. So we have now put together all the information for one project, $5 million budget. We can list different funding sources, reserves that will obviously drive then the underlying projected reserve closing balances, whether it is funded by also then capital grants or non-monetary contributions, monetary contributions or operating grants. Further, we can start looking at life cycle costs that will then be attached to the major project, whereas the previous data is only looking at the construction side. Now we're actually looking at the life cycle costs. So we can set any additional, first we set obviously all the high level dates for the life cycle, when it starts, how long we want to have that run. We can limit that to an only number of years. There can be a little bit of a delay when they actually kick in after the proposed budget or the proposal when the asset is constructed. We can allocate at a high level additional recurring income. So we might have $155,000 additional user charges and fees. If we are actually building that new aquatic center, other revenues, there might be potential for income reduction. Anything recurring expenditure, obviously we will need associated with that project also additional employee costs, materials and contracts like maybe insurance, etc. Expenditure saving, maybe. And thirdly, the impact of the depreciation expense as a result of that one major project. So when they start a default depreciation rate, again, that is coming from historical data based on the selected asset class, but that can also be individually then changed. The calculation, obviously, how that asset then will be depreciated, and the potential to also then look at the impact of maintenance expense. Again, we have a default start date. We can delay that. So example here, there might be 2 years worth of maintenance-free period, and then the maintenance will kick in. We can actually also nominate how long that will go. And maintenance rates for that type of asset class that can also be manually changed. So we have a maintenance rate, and all that information will then flow through to your output, to all the KPIs, balance sheet, income statement, and we have one flag that says include or don't include. So as a result of actually ticking that, yes, any information associated with that one project will then actually flow through to all their respective places in the LTFP. Okay, and of course that could be an example for a scenario where then the council uses that. That could be a single project or a group of projects in a workshop with councillor, the executives, to go and say, okay, if we are doing those projects, that is the anticipated impact on the long-term financial plan. Okay, and they're obviously then on the KPIs and everything. Talking about the KPIs, we obviously have all the financial performance and financial sustainability capacity indicators, and that is including detailed calculations. So the adjusted underlying result, there is really the detailed calculation, step-by-step, numerator, denominator, so councils can really follow that through. You can set benchmarks for each of those ratios. That could be a benchmark, either an industry-wide benchmark, or if a council has their own benchmarks, they can be used. That can be set as minimum or maximum, or both, depending on the ratio itself, the indicator. So if we look at one of the ratios and we set a minimum threshold of 0%, then a snapshot visually will show council whether our actual projected calculated ratio is within that benchmark or not. So green, yes, we are obviously above the minimum of 0% that we set, and if it's red, that obviously means we are below that minimum. But also the charts will also then include any of those benchmark lines, so that visually in the charts that can be seen. Charts, obviously, we have a range suits of charts for all the indicators and selected income and statement and balance sheet balances. By default, it's the 11 years. That is the base year and the 11-year forecast. As I mentioned earlier, one bar, one line for no scenario enabled, and if scenarios are enabled, then obviously it compares those two in the same chart, again, for better visualization. But we also have a second suite of charts. They are exactly the same, and those ones, council is actually able to, with a little slider, to select the number of years they want to include in that particular chart, whether it's here in this example 4 years, or whether they want to increase that to 5, 6, or maybe decrease, depending on the use of the reporting. Okay, and those charts also will be updated automatically, either 1 bar 1 line or 2 bars 1 line, 2 lines. Okay, so just now quickly to recap all of that. So we've got a very flexible, not just indexation, but a calculation of the future. Population indexation, global indexation, individual indexation, or dollar amount changes. That can obviously be done on any budget account and their respective amounts. That's up to council how deep and how detailed they would like to have the forecast to be. We can bring in on the base year budget any quarterly reviews can be added to the LTFP, so a council can see what's the impact not of any variations on the current year balance sheet, income statement, the primary statements, but also then the impact on the long-term financial plan. Reporting for business units like org structure levels, functional levels, if council desires to have that, launch schedules, and yeah, just the visibility of the financial statements as such and everything, and it's all updated. One change somewhere, changing global indexation, if that is a driver for rates and annual charges, that would then amend the income statement, which may in return also then change the balance sheet because of the impact on not just the cash, but also then say receivables or any other places. And we look actually after the annual rollover process in terms of the historical data update. We review everything for inconsistency, provide this year and last year primary statements overview that actually compares what last year's balance sheet was forecasted compared to now, basically having different opening balances previously forecasted and now replaced with the actuals. Okay, so that's always a very interesting report or information to look at, to actually go and say, okay, based on just changes where we actually ended up with the balance sheet information and other information, how is that actually changing our long-term financial plan? Now, just very quickly, our LTFP cloud version, which is actually still work in progress, obviously. It will have a user-defined number of years, so can be pushed out to any number, 30 years, 10 years, 20, it doesn't matter. Multiple users. Easy to navigate, obviously, different menus and so on. We'll be able to compare balances in the primary statements or any other reports from year to year, either just like our normal traditional, say, income statement, just the balance itself amount, or we can actually look at dollar changes from one year to the other, or we can look at overall percentage changes. Okay, so which obviously the percentage change might not always correlate back exactly to the global indexation item if we also have any other individual changes. Then we'll be able to extract or copy any of those statements to Excel via the clipboard and copy and paste. You will be able to save charts to different file formats, and for the count, it has a flexible PDF report generator in there for councils that are actually currently using either our year-end cloud or leases, or the fees and charges would be familiar with that report configurator. So you actually will be able to save different configurations there. Can include whether you want to print nil lines in the statements and so on. Okay. So yeah, thank you. Any questions?
Okay, thank you, Manuel. I do have a couple of questions. There was a question about CapEx life cycle costing, but I think you've covered that, that your product does do that. And the question came in before you spoke about it, I think. There's a question about how the model would handle one-off OPEX items.
Well, that one-off OPEX items, they could be basically identified on the respective budget account, and obviously via our different drivers. One of the drivers is a non-recurrent dollar amount change. So council can actually then go and identify any type of OPEX income, OPEX account, and actually add that one-off amount to the underlying data, and as a result of that, that obviously then will drive and update all the primary statements.
Okay, great, thank you. Got another question about how it works, how the product works with different levels. So you've got your unit level, you'll sort of roll that up into your directorate level, and above that sort of the council level.
Yeah, ultimately, any level that will be included, the condition is it needs to be a condition or attached one-to-one to a ledger account. And obviously, the balance is carried on the ledger account, but that ledger account is then masked up to those different levels. Ultimately, then the summary of those levels knows exactly what those amounts are, but also a breakdown of that type of income or expense. Is it OPEX, is it CAPEX, and also is it maybe rates and annual charges, or is it employee cost? So that view is then also available for any of those levels, whether it's maybe a directorate, department, budget manager, or if we look at the functional, it could be a strategy, it could be an outcome. Okay, great, thank you. Another question, are you bringing in current year actuals? And do you have the VAGO and LGPRF KPIs as standard? We don't bring in the current year actuals, because from a long-term financial plan, we don't actually need those ones. What is in there, it's only for the past 4 years historical data, and that's only coming off the audited financial statements. And regarding the KPIs, I indicated that earlier, there is all the financial indicators and the financial performance the financial performance indicators and the financial sustainability capacity indicator. So all those individual ratios that are under each of those categories are included in the LTFP. Some of those ones may need manual input. That is data that's obviously not necessarily available within a long-term financial plan, okay? Like number of rateable assessments or number of rate payers and so on, okay? Sure, thank you. And I do have a question about price, but I would invite those people to contact you directly. Yes, yep, okay. So anyone that actually would like more information, please contact Tony. You can see the email address. We're more than happy to do a more depth demo, and Tony can provide you guys with all the relevant information. All right, that's beautiful. That comes to the end of our questions. Okay. Thank you, Manuel, and thank you to all of our contributors today. We really appreciate them coming along and spending some time in helping us find, by providing products that can help us find time and flexibility in our roles. That's fantastic. I had a quick, very last question, Manuel. Oh, yes. How many staff shared across all customers are available to perform rollovers? At the moment, it's predominantly me, but every other of our staff members is actually able to perform rollovers, and is also able to actually provide support regarding the long-term financial plan. It is me predominantly, because I have been looking after the long-term financial plan over the past 12 years, build it up more or less from scratch. So I'm really the go-to person within LG Solutions, but like Tony and all the others, they're always able to answer questions and provide assistance. All right, thank you. Thank you once again. Okay. Thank you to all our panelists, and thank you to all of our members for jumping in and watching these sessions. I encourage you to contact the people that you find may provide value for you. Don't forget that tomorrow at 1:30 p.m. we continue. We've got an action-packed agenda full of interesting items, and then at 4:40 we've got our virtual happy hour,
And the FinPro virtual gallery, we're encouraging people to wear your footy collars to that. So that would be fantastic. Bring your scarf, bring your hat. And I guess that's it. Thank you.